You like the light array? You like the light I have now? It's wonderful. They don't care.
We got
They don't
natural
care
light
how
coming
well
through.
lit I am.
You are well lit. Looks good.
They don't care. They don't care. There we go. We're live streaming on the YouTube. Let's hit the mute on the old YouTube. Copy and paste our link so everybody knows where we're at and get this shindig going. Cause I guess me and GP just got to fight today. That's the way it's got to go. I guess we just got to fight. Some brothers fight, brothers hug, but sometimes we just got to fight. And I guess today's the day. He wants to poke the bear, so to speak. So here we go. Hey guys. Hi Nick. Hi
Hey,
GP.
what up?
Missed you. Welcome back to the US.
I know. And look at that. The market's doing perfectly fine. I
Oh,
just got to go on vacation
perfectly
every
fine.
so.
A bounce off the 200 day is perfectly fine. Hi Nick. Welcome back from skiing.
Yeah, thanks.
What are you giggling about, Nick?
Just you two getting after each other.
Already, we haven't even started. We're already getting back at each other. So GP is everything's fine. I've even quote tweeted myself like the last few weeks with everything's fine. It's fine. Everything's fine. GP, why is everything fine?
Why is everything fine?
Yeah.
Um, because there's rotation going on in the markets, and as long as there's rotation going on in the markets, it's still a bull market. You can talk about corrections and awesome that you timed it well, but there's still solid rotation going on. Look at all the large cap biotechs, Amgen, um, Gilead, J&J, McDonald's. I can go through the list of things that are still insanely positive for the year, even after this correction. Meta is another one. Netflix is another one. You're talking about it didn't break out, and so it broke down fine, but both Netflix and Meta are both up 10% on the year. It's only March.
When did I
Um,
say Netflix didn't break out?
no, not you. I'm saying that
Oh,
it tried to break out and it failed, and you're like, oh, that's bearish. And I'm like, no, we're still up 10% for the year, right? Like we are in the second day of March. We're 2 months in, we're 10% up on Netflix, and we are up. Wow, look at that. All the chip names are all at the bottom of the range and bouncing. We've been in a wide range chop since July. Today got the undercut, and that happened to coincide with the 8 months it took to get the 200-day moving average at the July highs.
I mean the Qs
Um,
are down 2.25% basically. So we can champion Netflix all we want, right? The bull market
what's that?
leader. We can
Yeah,
champion the bull market leader all we want, but the fact of the matter is the Qs are down for the year right now. Two
are
and a
they
quarter
down for
percent.
the year?
Yeah, 2.25%.
Okay.
I mean, they still look good though.
And they're how are they doing compared to July 2024?
July 2024.
Down 0.5%? Is that it?
Oh, well, I mean, we can make up time frames if we want. How are they doing since February 19th? Checked off at a minus 10% earlier today. We're sitting around 8 right now.
Yeah, but I'm pretty sure
I
you've been
think your
calling the
point,
short.
what we got into it was
Yeah.
scroll out and go to the previous 200-day hit. So let's just cut right to the chase.
What's the
There
chase?
you go. There's the previous 200-day hit.
Yeah. But we've been in a wide range chop. We've been pretty much sideways since July 2024. Forget the 200 day. That's not something I really pay attention to anyway. Um, we've just been in a wide range chop for what, 8 months now? 9 months? And as long as there's rotation in the markets, it's still a bull market. And there's been heavy rotation in a lot of names.
So you just to be clear, you
Just
are
because your tech
calling.
names aren't adding up doesn't mean there isn't a ton of stuff that's doing well.
So is this your range right here? Is that your range?
No, that's not the range. The range is the July highs, right? So we're right at that.
We're just under that.
Yeah.
So this would be your range then, from the current highs to the July highs. That's what you're calling
I
a range?
I would take it from the gap down. See that
From the
gap
gap.
down July?
Okay. Okay. So we hit bang on the gap down today.
Yeah. Which coincides with the election gap up, which coincides with the China gap down or the yen carry trade gap down. Um, yeah, it's if you're going to talk to me about individual names, sure, Tesla's down 50 something percent or whatever, right? Like, um, Google's down, Netflix is down, NVDA is down based on the last 3 weeks, right? Or whatever you want to talk about. But based on the last 8 months, we've been going sideways. I think NVIDIA's actually been going along sideways even longer than that. Um, this this is a common thing that happens in NVIDIA. It tries to break the lower range and then reverses higher and then goes higher. Yeah,
Do you think?
I don't see anything wrong with the markets. Um, I don't see a yes, there's opportune times to take money off and raise some cash, but you should be redeploying it, right? That's the question. And if you're not, then you're still bearish and you think it's going lower, then that's where I think it's a possibility. Like obviously anything is possible. I think the the typical range on the SPX, right? When it hits 100% extension is between the 100% extension and the 78.6% extension, which is 5,500 to 6,100. It's a 10% range. So there's lots of names to like. I think you should find what you like and get long. That's my personal opinion. I don't think we're in a case where dude, a lot of things have gotten beat up. FSLR destroyed. There's been a lot of stuff that has been destroyed. Um, no doubt about it. Redfin, FSLR, but there's still names like
Crypto,
Root. Huh?
crypto.
Crypto's been destroyed. Yeah, and that's all the pretty much popular names have been destroyed, and the stuff that is not so popular. Look at Amgen, look at ABBV, look at J&J, look at CVS. CVS, most hated name on the planet, has had the best returns in the S&P since the start of the year.
Expecting to go private. But
Doesn't matter the
price action
reason.
is price action.
Don't matter the reason. Um, look at McDonald's. Look at right. McDonald's is sitting near all-time highs in the gap. It's consolidating. Yes, financials got hit today. Oh, look at that. Right, it coincides with the Tech 200 day.
Man,
Stuff
Mister looked
happens.
like a good snag off the 200-day. I didn't even see that.
What's
What's
that one,
that?
Nick?
Mister,
Yep. Yep.
I just didn't realize. Yeah, there's a lot kind of flirting with that 200-day.
Yeah, doesn't mean the 200 day has to hold. Right now, for the first day, the 200 day is where the tech held and financials got sold. Coincidence? Maybe, maybe not. But all it says is that it's rotation, right? And so now that I've talked about Amgen and all these names, they'll probably underperform over the next 3 months while tech goes nuts, right? So it's to me, whenever I see rotation and I see rotation sector wide and not just one or two names, people are pointing out one or two names, the bull market's still alive, and it's a standard correction, right? 5 to 10% corrections every year. So yes, have things like Tesla got absolutely destroyed? Yeah, but dude, the lowest margins they've ever completed on earnings since like 2016, right? Like all the times, I think we've talked about this before too, right? Which is if Elon talks shit, he has always backed up his shit. And this earnings proved that he did not back up his shit. So Was I expecting it to go straight down without any real sort of bounce or anything? No, but that's Tesla. Tesla does everything that you can imagine to crush your soul. It's what it does.
Precious souls.
It does, right? Like
Your
so
soul
if
is
you
belong to me.
if you look at Tesla in the last 10 years, it's 8 months of gain. And all of that was during COVID. Right? We were in a wide range of chop from 2014 to 2019. From 2019, we finally got the expansion out, and it's basically all the gains came in that 8 month period since 2014 or 9 month period. So as a shareholder, you're like, oh, this is miserable, right? Until you get those gains. But um, yeah, like the writing on the wall for Tesla was written on that earnings, so it's expected. It never like the reason we talked about this in October, Tesla got re-rated because of earnings. They had multiple expansion of margins, multiple quarters in a row, right? And that re-rating would have taken place if they continued their earnings increase, margins increase, all that other stuff. But
Is
dude,
so
January was
is Tesla? You think it's along here though?
I think it's actually going back to like the 180s,
Really?
personally now, right? So it may see a bounce here and there, but I think it's like if you look at what the last time they shipped the bed in January 2022, we went to 100, and then January 2023, did they ship the bed? No, sorry, they shipped the bed in January 2023, and then they shipped the bed in January 2024, which was at 100, is where it bounced from 101. And then in January 2024, it bounced at 138. And so what's the kind of the closest pivot level of Tesla here? It's probably the 175 to 180 range. So still making higher highs, but until earnings consistently improve, this is what you're going to get.
Nick, what do you like about this?
I kind of like the breakout retest here. I think it's like it kind of reminded me of like the 20, was it 2019, 2020 round trip to the 200 day?
Yeah.
Where I think it was when COVID hit, was when it like literally I mean, we obviously undercut the 200 day here, but I don't know. I think it's worth taking a stab at a long here, but kind of to your point, I guess you got to see how whether or not the bounce is sustainable or if it starts to falter and roll, because now you've got all the short-term moving averages curled down with the exception of the 200 day. So
And you've got I mean 270 could be your ejector seat, right?
sure, yeah,
Yeah. And so I like it on the weekly, so I can see your point. It's a golden cross on the weekly and its weakness into the golden cross. Right? The 50 cross the 200 day.
yeah,
Like we've seen so many times, as soon as the cross happens, it becomes weak, and the weakness is usually a viable weakness. So I'm hoping it does. But what I'm saying is I'm not surprised if it goes to 175, 180, because in 2020, that 2019, 2020 period, their earnings were fantastic, right? They had the fundamentals to support, even though we had a move from 925 at the time all the way back to 325 on the breakout retest. It was in the middle of potentially every human being dying. Um, but their earnings were still really, really solid. And I think that's my biggest issue here is Elon, every time he's talked shit in the years that I've owned Tesla, he has always backed it up. And
yeah.
he did not back it up this time. And he's using future potential growth of robotaxi to pump it. And his prior attempts at using future growth to pump the stock has never really worked until earnings show it.
Sure.
I mean, Kathy Wood's been pumping that for 5 years, right? Like
She crushed it though. She hit her.
self-driving.
Yeah.
No. I'm talking about Elon using Tesla self-driving as all of a sudden some catalyst. What I'm saying is that has been Kathy Wood's MO for the last 6 years.
Yep. Yeah. Yeah. Exactly.
I'm
But
not
that's
I'm not
the
saying what she's doing in her own stuff is wrong. I'm saying he's pulling something from 5 or 6 years ago now out like it is a catalyst when
yeah.
we've been promised self-driving for a decade.
And even once he launches self-driving, it's not going to be something that moves the stock higher without the earnings to support it. This is, as much as this is a meme stock at many times, it's a very fundamentally driven, not based on your normal PE metrics and stuff like that, but it's a very fundamental, like you get an earnings re-rating and the buying doesn't stop. It's just you saw it in October. There was what, 3 consecutive quarters of margin expansion. And what did Tesla do in 2 months? It went from 213 to 488. So when they show their earnings, you can talk about elections, you can talk about anything else, but obviously Trump elections has not mattered for Tesla in 2 months, 3 months now, right? So it to me it still was an earnings re-rating, and when you have an earnings re-rating, it does really well. And then when you have it re-rate the original re-rating, it does really bad. Just my personal take.
Well, I
If
I
you're
I I
yeah,
don't think the elections are or the election and the inauguration is a direct buoy for Tesla, but it is for SpaceX, right?
yeah.
It is for Starlink, right? And those aren't Tesla companies.
No, they aren't Tesla companies, even though when it's bad news for any of those, it affects Tesla's stock price. But when it's good news for any of those, it doesn't affect Tesla's stock price. It's this, dude, I've been watching this for, I don't know, 11, 12 years now, and the bearish articles that come out during these times are just, they're, first of all, they're repetitive and kind of boring, but it's just how the
Well, I
price
think
action
the
works.
reason why Tesla reacts, right, is because it's an Elon story, right?
Yeah.
Yeah.
Right. It's not necessarily that Tesla, the company, is doing good or bad. It's just an Elon story that is associated, and that's associated to Tesla, right? So
Yeah.
regardless of what good could be happening in Starlink or SpaceX, those aren't publicly traded companies yet. So they are not getting the benefit of the doubt that one would see in a publicly traded company like Tesla. That's my point.
Yeah. Yeah. And all I'm saying is it only affects the downside, not the upside.
Yeah,
It's
right.
all
Because
it's all
there,
one-sided.
there is no upside. It's all an Elon story.
Yeah. But even the Elon upside story, they get a contract, all this stuff, like it doesn't affect Tesla's price only on the way down. And that's always been the case.
Nick, GP's obviously bulled up. He's saying be selective and start grabbing and growling. What's your take? I mean, you
Yeah,
said you like Tesla here.
I mean, I have this kind of the same tune that I kind of had on Friday, where I wasn't too thrilled with how nasty yesterday's bar was, but I kind of felt it was going to be one of those, one day, not one day doesn't make a trend, but like I don't know, I felt yesterday's move was kind of a little over exaggerated, so I didn't really know what to. I definitely put quite a bit of money to work, pretty much right off the open, but as far as like the indexes go, like I want to see the same thing. Like I want to see price kind of rally, like let's say on the SPY up to like 590, 595, kind of base there for a few days, and then kind of set up like another leg higher to at least make the reversal tradable. I think if you're trying to pick a bottom, like you see a candle like today, you don't see candles like we see that we're getting today in an uptrend typically. You see these in downtrends. And so it's like you can put money to work, but all you're doing is chasing like kind of a snapback day in a downtrend. Granted, we're near the 200 day and like we're at the low end of this like long range. So if there was like a spot that you're gonna pick to kind of throw money, in a knife catching fashion, like this is definitely the spot to at least initiate.
Yeah. And I think if you overlay the macro stuff is like we're down 10% in the last 3 weeks or whatever you said,
Yeah.
Ben.
Yep.
On the same news over and over again. Tariffs this, tariffs that, tariffs this, tariffs that, and different flavors of that tariff conversation, but that's kind of what we've been selling off. This is what I see on my news feed because I haven't been here for 3 weeks. So maybe the statement is different, but it feels like since inauguration, it's tariffs this, tariffs that, and we just keep selling off every time there's a mention of any sort of tariff. So today feels like one of those days where, especially with the tariffs going into effect, is like, you know,
And it's
sell the rumor by the news, so to speak.
but even so, like prices basically just like we've talked about move sideways considering the news coming out. That means everything's just being digested.
Yeah.
Like I don't unless we kind of take out probably today's low or even a little bit lower. I mean, then I might kind of change tune and be like, all right, we're kind of looking at like a bigger rollover here, but I don't know.
So is the market forward facing or not? Because
It is. To me, it is.
if it is, tariffs have been a real possibility for months, right? And regardless of what is said on a day-to-day action, the market forward prices, right?
Right.
So this wouldn't be necessarily tariff related, or are we saying the feeling of tariffs hasn't even struck what we're supposed to be seeing in the market?
I think the tariff conversation started on the July gap down with Trump. If you were, it wasn't the yen carry trade that started the sell off in July. It was a lot of tariff conversations, especially around. I think it was Biden who said he's going to put restrictions on like Chinese imports or exports or whatever it was. And I think that's when Trump started. I don't remember it was a while back. I don't remember all my history, but that's around the time that the conversation started, July, right? And we had that gap down on, I believe it was Biden getting stricter controls on chip exports to China or whoever it was. I can look it up.
Yeah, there was a lot of talk of that over the course of the last 18 months of restricting chips, specifically as NVDA grew and the AI trade took over. We'll just call it that. So there was more talk of restricting chips to China. But I guess my question is, if the market is forward facing, which we all three agree that it is, right?
Not 100% of the time, right? Market can misprice stuff in the short term, even if it's forward facing.
Sure. But
I
we
mean,
would I guess what I'm saying is what we expect the price to be on March the 4th, the market is seeing ahead of that, correct? And that's why the price is 581.40 right now on the SPY,
Hmm.
right?
Okay.
Is that not the way you guys see what today's price is? It's a forward facing price.
I do, but when we're in a range, I see like I'm not an expert or in terms of like looking at like distribution versus accumulation. I try to keep that out of my vocabulary when I'm looking at a base or a range because it might behoove me to start thinking a little bit differently, but I'm always looking for the continuation trade. So when we get the ranges and the bases, like I'm just looking at periods of time where we need to just legitimately rest in an uptrend. We need to digest the recent moves. Like the games need to get played where people that missed what they missed are able to, reposition and pivot. Like I if the range if range expands to the downside out of the consolidation period that we're in currently, yes, I think the narrative will be that tariffs were the cause of this. Unless there's something else that pops up in the news that like we haven't, whatever the black swan thing is, but
So forward pricing with the caveat that when things aren't continuing in a direction, something was mispriced and it's a momentary change of order.
I mean, typically, yeah. I mean, like the alternative is like we're either in like a consolidation period, uh,
Mm-hmm.
a little bit more serious interim correction, like let's say 2022, or we go into like a raging fucking bear where like we're talking, I don't know, who knows what type of like collapse we see. Most, yeah, I don't know.
I don't think anyone here is calling for any type of collapse, right? Like you haven't heard me say we're having a collapse.
Right.
Has that changed? Because in December you were saying that we're going to see a much, much bigger correction. So has your opinion changed there? Because you were lightening
Um,
up to because we were talking about what the yield
yep,
curve
yep, yep,
inversion.
yep.
So has that changed at all?
I still think we have some downside to go, and by a deeper correction, um, I mean we hit 10% today. So in 3 weeks we went from all-time high to down 10%. I don't think the sell-off's over. I'm not trusting the 200 day on a second tap in the last 18 months on the Qs.
So are you thinking like 560s,
I
550?
mean,
Sorry, I was.
I don't look. You guys know I don't look at the daily a lot because I don't spend time with it. I mean, I think that once we get to 483, which is the 50 weekly, all bets are off on where I think we could bounce. I think if we got into 475 ish, somewhere through there, I'll make it a little larger. Somewhere through here, just under. I would like to see an undercut and go, but if it melts that 50 weekly, which dang near was a close tap today, yeah, I think we're going to go deeper. So if we go down that far, GP, I mean that would be 12, 13%. So that's a little bit greater than your everyday correction. I don't necessarily know that I think that we're going to 420s or 440s, but I've said all along that I want to see what happens at the end of quarter one, and we're still not there. So I'm not ready to start throwing money at things yet. I appreciate your guys' bullishness. Um, there are some things that I would like to get into, and I think these are fair prices to some extent on doing that if the market is in a continual bull market. But I got to question that right now, look, especially looking at the daily and the weekly. We've had these moments to sell the rip everywhere, right? Like this was a huge gap down to go up. This was a big gap down to go up. Like we've had these moments, and does that mean that we're not still in a sell the rip environment? I don't know. I think we probably are still in a sell the rip environment. We are at the bottom of that range that you so eloquently put together there, GP. But at the same time, we did just break down from a breakout. And as we've said dozens, if not 100 times, false moves bring fast moves.
Yep.
And yeah, 10% in, we're right now roughly 8% on a 3 week downer. I don't think that I'm to the point where I'm like, yeah, that was a nice correction. It's over. We're at the all clear moment. I need a few more weeks to get some more data.
You
That's
know,
all.
Dude, and that aligns with seasonality for the past like 400 and something years. February UpX to March UpX is a shit show and has been for as long as we've been doing this. So every February to March, we have this conversation, not you and me and us, but across the markets on, hey, is this the top? 2022 turned out to be one of those things. but almost every other spot has just been a 1 month. Let me screw your options type. Let me get cheaper stock prices movement across the board. And so why I think that is the case is if you are following Dr. Copper is telling you that the economy looks pretty good.
Yeah.
And so if you guys haven't noticed, a lot of the broken relationships over the last decade to 15 years since QE went, HG is the symbol. H as in Henry. All right. So this is Dr. Copper. This is the daily, but take a look at the weekly. If you zoom out even more, it's it it's to me that looks like a really solid inverse head and shoulder here, right? Across the board. And so I think this is ready to go higher. And a lot of the relationships that have been broken over the last 15 years, one of the first ones that we've been noticing over the last couple of weeks, couple of months, and you've seen it since 2022, it's a slow crawl, is the markets used to go up when TLT went up, right? When bonds went up, and the market stopped. That correlation broke over the last couple of years.
Yeah.
And now you're seeing the correlation rebuild, but as it used to. So for everyone who's not used to trading the markets past the last 5 to 7 years or 10 years, it's now becoming a safety trade, right? And so you're starting to see some, and this makes sense because monetary regime has shifted. We've talked about this since 2022. It's
Just
not going
look
to
at the
be
volume in
easy.
the TLT. Just look at the
It's
volume.
it's monstrous, right? And so this is telling you that bonds and stocks are no longer correlated to the upside, in my opinion here, right? And the relationships that happened back then were also that it was Dow Jones theory was more prevalent. Dr. Copper guiding the markets higher is more prevalent. So what does that typically mean if Dr. Copper is the one? It's not your tech stocks that are going to do well, right? It's going to be your macro related stocks, your commodities, your um,
I don't think that's.
agriculture, stuff like that.
I mean, I hate to be the wet
You want to
blanket
say Batman,
thrower.
I get that.
I no, I'm not going to say Batman at all. No. Um, I mean, volume is drying up. You use that tool more than I do,
No.
but I wouldn't be a buyer of this here. And, going back to TLT, like that tells me that somebody is happy for a 4.5% gain. That's
Yeah,
what
so it's
that's
safety
what this
trade,
tells me.
right? That's what
Yeah,
it
that
tells me.
tells me somebody's happy with a 4.5
They're
percent.
saying, I don't want stocks. I don't want to deal with Trump. I'm putting it into bonds and collect my 4.5%, which I don't know about you, but when I talk to people who are looking to me about investing is a conversation that continuously still happens to this day. It's like, oh, I'm just going to put in government bonds. So because I don't know what crazy Trump is going to do. But take out, so like on the HG chart, right? On the Dr. Copper, you don't think this is a really bullish chart on the monthly?
HG on the monthly?
Yeah,
Well, we didn't look at that one.
you don't have all the data. I have the data going back to 2004.
No, it wasn't Cover Futures. It was
Oh,
Hamilton Insurance Group.
okay.
I mean, it looks overextended. It looks like it's at the top of the range to me. Like
It's because,
I see all those high wicks getting pushed down. That's what I see.
okay.
I
I
mean,
like
that's what I see on the screen. I haven't looked at this chart, so I don't know what you expect me to do. Like
No, no, I'm not. I'm
I'm
saying
not
I said
trying to
okay.
argue with you just for the fuck's sake of arguing with you.
Nick's just laughing, but I can see what you're saying. But we're having a conversation on the technicals, right? And I think technically it's got an inverse head and shoulder above the previous highs from 2006 to 2008, right? And there's been a lot of buying quarterly, yearly, etc. over the last 7 or 8 years.
So would you put the neckline roughly there, like 440, 475-ish?
I think so. I posted the chart yesterday, but
I
490
don't
is
look
what I
at your
have.
old charts. Your old
490.
charts. Your old bullish charts.
490. I think what I'm trying to say in this whole
490.
conversation is that we have been so used to tech outperforming in the markets that we refuse to look at the stuff that's outperforming. The markets have changed. We're no longer in a monetary free money society, right? We may get lower rates, we may get stuff. So it's time to start looking at the stuff that worked prior to 2008, right? Do some history, do some work, go back and check stuff. There's tech will do whatever it's doing, right? It'll be a beneficiary of a growing economy in general, but it can have short-term weakness as their earnings tend to, um, expand and collapse based on short-term policies and stuff like that, tariffs, et cetera. But I think ultimately tariffs are really good for American businesses. I think we've talked about this before. There might be some short-term pain as they get used to recompeting for American-made products. But if the price discrepancies change, like if you can get a blender from China on Amazon for $40 and you can now get one before for $20 and now it's on par with an American-made blender, you're going to see more Americans start to build American-made products because the price discrepancies go away, right? You can't compete with the $20 blender, but you can compete with a $35 or $40 blender. So just stuff to think about. I think there's a lot of stuff that's going on here, and we're all focused on obviously tech names and stuff like that. I think you should be
I'm going
looking
to
at
say the
other stuff as well.
TLT breaks out before your Head and Shoulders breaks out.
On the HG? Yeah. That's perfectly fine. I don't have a timing on HG. I think the timing on Dr. Copper is that on a weekly, monthly, and quarterly basis, I see a bullish consolidation of a previous high from 17 years ago. To me, that is inherently bullish with the wicks, without the wicks, whatever it is. But as long as it's staying above that 2006, 2008 high in Dr. Copper, I think it's a pretty good look for the agriculture manufacturing um, goods based economy.
Nick, hit us with some thoughts. I don't care what it is, just life thoughts, stock thoughts, just
I don't pay attention to the TLT too much. I try to keep my universe relatively small and kind of simple, but um, I don't know. I think it's like right now, personally, I think it's a patience game. I think we kind of talked about it at the beginning of the year where it was like I think 2025 was gonna be a big year. Like if you're not focusing on weekly charts, you're gonna do yourself a disservice because you're gonna be overly sized. And so far, it's kind of been the name of the game. I think if you're sized right and in like stuff that you really want to be in, I think now is a pretty exciting time. Today was probably either today or and even Friday were probably two good days to add to long-term positions if you were sitting in names that had a lot of cushion for like the shorter term swing trader. I mean,
yeah.
just bide your time. I think everyone's probably at least those that are bullish, I think everyone's pretty in alignment that we kind of think that there's going to be however it really sets up, whether it's like a follow through day, capitulation low, like we're going to get some type of low risk entry here within the next like few weeks between now and April. Which if today was it, then today is our first rally attempt day one. So you got to give it a few days to a couple weeks to see if we can put in a higher low and then create that B point breakout leg to the upside. But people should be I personally, I mean, again, I think people should be excited about this because if you went to cash pre-election, if you went to cash post-election, if you sold into the end of the year, if you sold into even this sell-off recently, like you're getting gift prices in a lot of names. It's just a matter of like having them on your focus list, alerts, and seeing them hold, where you want them to hold, or seeing them set up in the manner that you want them to set up. But we need this horseshit like behavior to let charts, patterns, bases set up. So as frustrating as it is, I think it's creating a lot of opportunity in the later half of the year for us.
Yeah.
Do you
Do
think
you
do
think
you
it's
think it's
similar
frustrating?
to? Oh, okay.
What's that?
Do you think it's frustrating?
I mean, anytime you're getting stopped out, like, I had a shit ton of trail stops that got ran, obviously, last week while I was skiing, and it's just like, of course, I'd rather see positions working.
Yeah.
But at the same time, I mean, again, like on a personal level, like I feel like I have been sized not perfectly, but enough to satisfy my own uh, ego and triggers. Like nothing's really been
Yeah.
dysregulating by any means.
GP, you've been out of the country, and maybe I mean I know you've been keeping up with the market, but do you find it frustrating at all? Because I don't get
I
that
haven't I
sense.
haven't really taken any trades over the last month or so. So I sell some puts here and there, but outside of that, I haven't really. It is kind of frustrating, but you also have to understand how much we've moved, right?
Yeah, for sure.
Like there's names like Meta that should have never been at 80, right? In the first
Yeah.
place. Like that was just ridiculous on every level. Like it was going bankrupt and this guy's still pulling in cash, right? Like it was and people were still asking to short it from 80, right? Like it was kind of nuts to be like, oh no, this is gonna go another 70% lower. And you're like, dude, in what world is something that's making billions of dollars gonna go to zero or close to zero? And it got damn close. It got to 80, which is nuts on its own. But these things have run quite a lot. So understood that it can be frustrating and we haven't gone anywhere. But this time period, I think we've talked about it before, reminds me of the 2015 to 2016 time period in which we had the China currency crisis in 2015 as well. But we basically sat sideways for about 16 months, right? And so there's that big green bar is the China uh currency crisis. I don't know if you remember, Nick.
Yeah.
Uh it was this massive, it was like August 20th or something like that, and the market just took. It was obviously right into UpX because that's how this market goes, and it hasn't changed in decades. But um, this reminds me of a very very similar kind of pattern. As you can see, we bottomed in 2015 there. In August 2015, we kind of retested the whole area months later in February of 2016, and then we still went sideways for a while. So and that also began a pretty big move to the upside after that consolidation ended. So I'm in that camp. I'm in the camp that we had a massive correction in 2022, like 2009. That one was obviously a lot bigger, percentage wise on the indices, but not necessarily stocks, right? Like it was
Yeah,
only 37% down on the Qs, but there's names that were down 80%, 90%,
yeah, for sure.
right?
I talk to people,
So
they'll be like, dude, do you have any idea how bad 2022 was? And they're like, no, no. Well, what? 2022? What do you, they don't even know what I'm talking about because, all their, everything, if you were index tied, you maybe, what do you see? Probably like a 30% haircut off the high.
yeah, but that's the thing, right? You had blue chip companies down 80%, right? Not
Yeah.
like and companies that were cash cowing, even with Zuckerberg's metaverse nonsense. He was like, you know what? I'm still going to make an extra $10 billion this year, right? Even if I'm going to go spend it on jack shit and approaching my tickling my balls fancy. Um, but he was still making a lot of money and it was still down 80%. So the valuations, as we talk about, Ben, you asked the question, are markets forward looking? That tells you the markets aren't always forward looking, right? That's momentum driven. That's positioning driven at that moment where Meta, which was I think at that time trading sub sub double digits on the PE, right? That wasn't forward looking. The forward looking is you buy 80 and set it and forget it. But markets do misprice stuff in the short term, giving you opportunities for the long term.
2016 bottom was 18% off the recent highs, just for a little.
Yeah, but percentages haven't really mattered because the destruction underneath, I think, is what kind of drives me to some of these conversations. Like, um, I guess Nvidia can fall lower, but the reality is Nvidia's earnings were ridiculous, right? Like, you will start if it falls much mo lower, it may be a momentum conversation, but fundamentals, it'll get to the level where it's meta cheap, right? So how much can Nvidia really fall unless their earnings really tank, right? Next
Yeah, no, I'm
quarter.
just looking at the cues, and I'll keep 18% in the back of my head. Not
Is that about
not
550?
say that I'm expecting that, but if we do think that this could be 2015, 2016 ish, I would make the argument that maybe 9% isn't isn't a deep enough drawdown just yet.
Yeah,
You
but I
think?
think you got the 18% already in July, right? And so this is if you look at so if you compare the August lows of 2015, which is the China currency trade, the second bottom happened in
16.
February
Yeah.
in 2016, which wasn't, I don't think it was 18%. It could have been, I don't know.
Yeah, no,
Was
it was
that
six,
second?
it was 16%.
The second one was
15.8.
16%?
Yeah.
Okay.
So would you be
Oh, no,
thinking?
no, no. In 2016 it was 18%. In 2016 it was 18%. Our first drawdown in this trend, the yen carry trade, was 15.87%.
Yeah.
You thinking like the Q is like 450-ish, give or take? Is that what you're like the range?
I mean, I don't know, Nick. I mean, I wish everybody knew what the bottom was and we could all just buy it together, right?
Yeah,
Like I wish
uh,
I had a hard number for you. I just don't think we're to the point of getting there. And when I look at the weekly, like I'm seeing these wicks push up. I'm not blind, just like I was calling on Dr. Copper on the wicks push down, right? Like I'm not blind or oblivious to what I think is going on, but um we're basically buoying, right? And I think we get to a point where we have a beach ball effect of holding the beach ball underwater. And I don't think that is today, and I don't think that is this week. I could be wrong. Shit, I've been wrong a lot. But right now, I'm not compelled to be like, oh, I'm missing it. If I don't add to my positions right now, I'm missing it. I don't feel compelled yet.
I mean,
Yeah, because you probably added at these
four-ish.
prices 8 months ago.
What's that,
This is
GP?
I
Well,
said probably because you added at these prices 8 months ago. You know what I mean? Like AMD is sitting at prices from 2021, 2022.
I mean, my AMD position's like at $60 a share.
Yeah.
So,
But it's still like it hit like 90 something today, like 92, whatever,
yeah,
right? Like it's
it's been in the share. We've talked about AMD.
yeah.
I mean,
But that's what you
it's
it's hard to
it's
buy
hard
dips
to
when you're
go
in this wide
individual
range.
stock by stock because
Yeah.
there are a lot of these names that are torn the hell up. I mean, look at Microsoft. Microsoft doesn't look good. You can't tell me that that's a good looking chart.
No, but we talked about Microsoft being a short months ago,
Yeah,
right?
I,
Like
I
yeah.
know. That's not my point. Like there are a lot of individual names that carry weight that don't look great, right?
Yeah.
Apple, I mean, Apple's Apple, but Apple doesn't look great to me.
I
Microsoft looks atrocious to me. Google does not look great to me, right? Like we've already talked about Tesla, so I'm not going to revisit that. Amazon doesn't look great to me right here, right? Like there's a lot of names that just NVIDIA, we talked about NVIDIA briefly. Could it hold here? Sure it could. Could everything hold here? Sure they could. But I'm giving you what I see on the chart right now, and I see the possibility in NVIDIA of a Head and Shoulders being built.
yeah,
Right?
possibility.
Right?
Yep. If it's forward looking, it's possibility, right?
Right? That that's
But
that's my only point, and I've said the whole time is Let's see it when we get to the end of quarter one and see how things look. Are things still scary? Is my skin crawling? Or do I feel like we've had enough pain? Right now, if I had to make a bet, I would say we haven't had enough pain. But I'm a realist. I don't like being bearish. This is
Yeah.
the longest period of bearishness I've had since you guys have known me. Normally, it's out of my system in 24 or 48 hours.
Well,
So speaking
on the
of which,
monthly,
are you
I don't,
watching Hims at all,
yeah.
Nick? I know you've been watching it. Um,
Yeah, I saw the collapse.
it's not the it's the similar collapse to the Amazon collapse in November, right? It's holding the 50-day, tested and held, um, right? And it hasn't made a new low here. It's similar to
Call
what
it
it
what you
did.
want, but it's a collapse. I mean, 42% off the
What's it up
high
for the year?
in 3 weeks. We can talk about what it's up for the year, but if you didn't take profits, are you up for the year?
Me, yeah.
I'm you, the royal you,
I am. I don't care about anyone else.
obviously.
No,
Put more
so
tariffs in place. He doesn't care about anybody except his stock portfolio.
and so the other one, like let's move on from overall talk because I think we're running out of time. So here's a name that I went long yesterday. It's in a range that I think is going to give us, you know how we've talked about I hate IPOs
Yeah.
You
with
got
a
in an
passion.
IPO?
I got into a IPO that is now matured, right? And we talked about this name years ago. I think it was 2022. I think it's finally giving you, it's called GFS.
We're both tuned in.
GFS.
Global Foundries.
Oh yeah.
Yeah, we
So
love it at 30 in the 30s. We love it in the 30s.
yeah, so I got long here. I think you have a very tight risk reward here. If this turns out to be the monster double bottom that I think it's going to
Yeah,
be here, um, it's American made chips. It's it's
Foundries.
uh
Foundries.
yeah, it's all American made though, right?
Yep.
So I like the story that's behind it, but also the technical setup to me is I think phenomenal here. And I know it's not your prototypical setup, but this is what I wait for in IPOs in general, which is let them wipe out the existing shareholder base before it starts to move, right? And so, and you have it's 35.85 is your stop. You're risking what, $2 down, maybe?
I'm glad you brought up GFS. Nick, you were going to say something right before the GFS.
Well, the reason I was asking about your downside, max pain was that the chart of the Qs on the monthly, we're starting to see a monthly MACD cross to the downside.
Ooh.
So that kind of had me, I mean, it has me a little defensive too, just in thinking that like, do we see more do we see more sideways? I'd be inclined to think that if the bottom falls out here, like it's kind of like a waterfall. But anytime I seem to want that or expect it, it just does not happen. But anyway, that was the reason I was asking you why or where you were thinking, because I was thinking like basically anywhere from 430 to 450, that kind of whole zone.
Yeah, I was
If
going to say 440 to 450 kind of makes sense, but
yeah,
at the same time, when you have momentum, that shit likely gets undercut, right? And it could be 430. That's why I hesitate to. Again, if I knew where the bottom was and everything that I traded, I wouldn't be on doing this with you jokers. I'd be on a beach somewhere. I guess I could still do it, the podcast on a beach. I've done that before. Um, no, I mean, it all is all determinant on what happens here at the 50 weekly, in my
yeah, for
opinion.
sure.
And if we go under that, and not just an undercut, right? You have to use the weekly time frame as a true weekly time frame. If we close and can't get back above that, yeah, I mean, could 450, 440, 430 even be a possibility? Absolutely. But I would see if it would want to catch first somewhere here in this like 470 range, 460, 470 range.
Which is the quarterly low, right? On the Qs, I
Yeah.
think it's
Yeah. Yeah. Yeah.
477.40. Yeah, 477.40 is the quarterly low. So as of now, it's still not broken anything to be concerned about, right? It's
Right.
on a quarterly basis. So here's where the MACD I think matters a little bit more to me. The quarterly MACD is not curling down,
But
right?
that's
So
that's part of my point too, GP. Sorry to
yeah,
jump in. I know we're running out of time. That's part of my point too. Like, yeah, there's people who are all over the place on social, whether every move is the end of the world or this is the time to buy, go all in. That's just the nature of social media. I don't think that there is enough real fear in the market. I haven't looked at the fear and greed index. I will pull it up right now.
well, it's an extreme fear.
It is an extreme fear, so you're probably good for a short-term buy if nothing else. It is currently sitting at 7. No, that's not right. Seven
I think it's like 24 or
21. It's
something.
at
Yeah.
21. It is an extreme fear. So I could it be another sell the rip occasion? Absolutely. And I think that's what I started off this podcast by still saying that we're in, most likely in, is a still sell the rip. Um, I like that you brought up Global Foundries, GP, because I have been waiting for my Intel trade to come back to me, and I think we're almost there. I will probably re-enter long on Intel for another trade around 22, 25 or 50, somewhere through there.
Hmm.
Above the 9 and the 20 weekly moving average. I love it for another short-term trade. It's that trade has done me well, and as much as I hate Intel, thank you for putting some food on my
Yeah.
table.
So like there's obviously other names that are doing well. GFS was one of those like, hey, if you want to bottom fish in an IPO, this is one of those great moments where it's an opportunity to have very, very low risk to the downside. 35.85 is your stop. That's literally 7 or 8%. It's $2 down, and upside could be back to the 50s, back to the 60s. So you have a potential 875 to 100% move in this name. I like the accumulation on the weekly. There's other names too. Like if you have you guys been watching Root? We talked about Root a while back as well. Um, Phenomenal monthly close. It's insurance name.
No, I haven't been paying attention to Root other than it
Yeah.
went up.
Yeah. They crushed earnings, right? Like their earnings were phenomenal. And HIM's earnings were actually phenomenal too, but that short interest of 37% or whatever it is just a backbreaker. Like
I
the
let
thing about
Behind know
today,
about AMD. AMD, if 95 is the low, there's been support there in the past. Great. But it's guilty until proven innocent. I mean, you've got every moving average on every time frame practically curling down. So
quarterly MACD breakdown too in AMD.
it's not a good look. Doesn't mean it's not a great investment. But just right now it's pretty much shit-tastic. Nick, we'll run out of time. Hit us with 2 minutes of goodness. What do you
So
like?
what's that?
What do you like, or what would you sell the living piss out of right now?
Uh, the big one on my radar was GRAL, GRAL.
GRAL?
Yeah, I caught most of the move.
Oh, that's a big
And
move
then
today.
sold out of it. It was just showing an early RS. So it popped up on my screens like early this morning. Um, yeah, again, like I kind of said earlier, I think a lot of right now is a patience game. Like if you took a stab at some names this morning off the open, I think great. Now just kind of wait, bide your time to see if we put in that higher low to leg in, especially for the guys that are more like swing momentum driven as opposed to like, longer term position guys. But today's a big, I mean, I would argue that today is probably a more important bar than Friday. Oh, maybe not. The volume didn't, we still got some time, but either way, this is a high volume low. So to your point, there's definitely a good opportunity that, or a good chance this low gets tested. Whether it holds or not, kind of depends on whether the volume's there. But either way,
You know
yeah.
what looks unusually good?
What?
Phyllis.
Yeah.
Boeing.
I was just
BA?
Holy crap. Yeah, what the hell? Does that not look like a
Let
monster
me get
inverse
my
head and shoulders?
glasses on.
on the
Doesn't
week
that look like a monster inverse head and shoulders with a pretty solid green bar at the head?
Yeah, I have an alert set at 190 on in my alert list.
It literally
Yeah.
retested that level today, that 159, 158 level, and it's starting to wick. Um, the head has the most volume, green volume, buy volume. This is an interesting chart. I don't know if I can physically get long
I
Boeing
like
because I hate it
190,
so much.
Nick. I'm with you, Nick. I like 190. I would want to see it prove itself before
Yeah.
I got all frisky. I do love a hated, beat up name, though. You guys know that about me. I love a hated name. I love it with a passion. All right, boys. That's an hour. I love you,
Even.
GP.
Yeah, yeah. So hey, look, listen. Um, I I I ultimately think all of this stuff is a topping process, right? So I think there is a bigger decline coming in the markets. We've talked about this in financials are leading, right? Financials leading are an inherently bearish thing. They are the last sector to participate because it's usually the last sector to get deregulated. And this administration is looking at deregulating the entire markets, which then causes a frenzy in the markets to the upside, right? This has been the cycles for however many years, right? And so once banks start outperforming, which they are just starting, in my opinion, um, you'll start to see you'll see underperform. We're seeing underperformance, right? Financials are performing really well compared to tech and other names, and so that underperformance may continue for a longer time while the markets still stay solvent and move to the upside. I think we saw that even in 2007, 2008, right? Until the big crisis where tech was lagging hardcore in financials. I think there's ultimately a conversation here that the market is in preparation for a much, much bigger decline. I just don't think it's yet, right? And I've said that for a few years now. I just don't think it's yet.
I,
And
I don't disagree with that.
yeah,
See, we ended on a lovey-dovey note. I don't
I
disagree.
still hate you. It's okay. I'm just kidding. I'm just kidding.
Nick, I do love me some you too.
I love both you guys.
Yes.
All right, fellas, we'll do this next week. I've missed you. I'm glad we're back doing this regularly. Hopefully, I should say, hopefully, we'll be back doing this next week. I will let you guys know tomorrow about what's going on with your boy might have jury duty. So we'll see. I'll let you guys know what the dealio is, though.
Cool.
Later, guys. Thanks.
Later.